and welcome to our Homebuyer series. My name is Cindy Taylor and I'm with Keller Williams Indy Metro South. This is video number 6 in our series, the Homebuyer series. While you may think that once you've signed a purchase agreement, most of the work is done, well, this video will show you all the steps that are needed to take after the purchase agreement is signed until you close. As well as things not to do before closing. I know you're excited and you want to buy all these things for your new home that you just put in an offer. And as I mentioned in video number 3, in the pre-approval video, you want to make sure that your credit doesn't change and that your employment does not change since you were pre-approved. Or the lender may not approve your loan. This means don't change jobs or become self-employed. Don't go out and buy new furniture or appliances or a new car. Don't spend money that you saved for your down payment. You also don't want to make any large deposits to your bank accounts or change banks. That kind of makes the lender suspicious, and don't co-sign for anyone. Do try to keep your financial picture pretty much the same as when you were pre-approved. As we mentioned in the last video, you'll the first thing you do after you've signed and it's been accepted, the purchase agreement, is you'll take a earnest money check. That is the deposit showing that you're putting money into it in order to buy the house. There's also HOA documents that you'll have if you're in an HOA, which is Homeowner Association. And your realtor will send you those documents. And be sure and read those. I know they can be lengthy and boring, but make sure you're okay with the rules and covenants because you will have to adhere to them once you've moved into that new home. You want to be sure and contact your lender. That's for the full loan approval. Your realtor will send them all the documents, so you don't need to do that. Another thing, and all of this is in the purchase agreement with dates, you want to get homeowners insurance. The lender requires that you have homeowners insurance and it should be effective the day of the closing. Just as a note, you might shop around and a lot of insurance companies, if you have your car and home bundled together, they will give you a discount. You have home inspections. You'll want the house to be inspected by a home inspector. Your realtor will recommend 2 or 3 that they've worked with, but you're free to choose your own inspector also. So you want to set up the home inspection in the time frame that is allowed in the purchase agreement. Try to attend the inspection walkthrough. It helps you learn more about the house. They'll tell you a lot of things that maybe you wouldn't know, especially if you're a first-time buyer. And keep in mind an inspection report sometimes can be very thick. It may freak you out that, thinking all these things are wrong with the house, but, just keep in mind that they're usually fairly thick, and that's normal. There's an appraisal, and you don't order the appraisal. The lender will order it from their list of approved appraisers. After you've signed a contract, these are all part of contingencies that need to be met before you can close. Contingencies just mean that there's items that either need to be met or dealt with, or the deal will fall through. There's the financing contingency, which we've already talked about, inspection contingency, the clear title contingency, and this is normally on the seller's side. If they have a lien against that property, that needs to be satisfied before the title company can give clear title. Good condition. The seller should leave the house pretty much the way you found it when you walked through the house before you made your offer. You know, minus the furniture, of course. The community covenants and restrictions. And that's if you're in an HOA, that you've signed off, that you've read them, that you're okay with the covenants and restrictions. And your realtor can explain these in more detail. What are some of the potential issues that you might have? Finances. And just like I talked about earlier, the other thing, I know you've been pre-approved, it still has to go through underwriting. And if they find anything different, you could be denied the loan. And when this happens, the deal falls through. On the appraisal, sometimes they can come back low. And when that happens, there's 4 different things you can do. You can ask the seller to accept the appraisal price. You can make up the difference if you have the cash. If it's $1,000 difference, make up that $1,000. You can cancel the contract. That would be a legitimate reason to get out of the contract. And you can appeal the appraisal. And your realtor will go through that if that's the choice that you want to do for the steps to do that. Sometimes inspections come out with major issues that the homeowner didn't know about. Keep in mind, we're talking about major issues. In Indiana, a defect is defined as a condition that would significantly have an adverse effect on the value of the property. It would impair the health or safety of future occupants if not repaired, removed, or replaced, or it would shorten the normal life of the premises. It's not for a plate on an electrical outlet being missing. So it's something major, and if that's the case, you can get out of the contract, or you can negotiate with the seller on fixing those items, as with any other items. So once all the contingencies are met and everything comes back, in Indiana, we use a title company for closing, and the title company will advise you, and it's called an ALTA statement. It's basically your closing statement, how much money you need for closing, your down payment, and any additional, they'll subtract out your earnest money, but they'll give you an exact dollar amount that you need to either wire the money or bring a check, depending on how much it's for. If you wire the money, they'll go through the procedure with you on that. It's very secure because of all the wire fraud that's been going on. So then a date and a time and a location will be scheduled to close your home. So on the day of closing, and possibly the day before, you and your realtor will do a final walkthrough just to make sure that the property still is pretty much in the same condition as when you looked at it before. So then at closing, the sellers may or may not be there. Sometimes there's separate closings due to conflicts of schedule. They're out of town, whatever. But a lot of times it's both the buyers and the sellers that are there. And you're going to be required to sign a whole bunch of documents at closing. There's a closing agent that's with the title company, and they will explain the documents to you and then have you sign those. So once everything's signed, then you are a new homeowner. So congratulations. Now you're a proud homeowner. Thank you for watching. I hope you enjoyed the series. And if please feel free to send me an email or call me if you have any questions. You can also like me on Facebook or subscribe to my YouTube channel. Thanks and have a great day.